Three things can happen from here. The share price can go up, it can go down, and it can also go sideways. And what we're going to do is look at what happens when each of these scenarios happen. So, the share price goes above $24.50. This is what happens. You bought the shares at $24.49, you've rented them out at $24.50, so what you've effectively done is made a promise to the market that you're going to sell your shares at $24.50. So if the share price goes to $24.80, you are obliged to sell your shares at $24.50. But for this privilege, you have received a $3.10 premium. And times by 1,000, we know we've got an income of $3,100. So to show the workings out, you sell your shares at $24.50, which is $24,500, plus your rental premium received, which is $3,100, gives you a very nice total profit of $27,600, which looks pretty snappy, I bet, doesn't it? Now what happens if the share price goes sideways? Same thing, bought the shares, rented them out, received the premium. Your total income's $3,100. If the share price is, say, $24.20 at this stage, all you need to do is simply re-rent your shares for the next month. It's simply all you need to do and collect some more premium. That's all you can do. And when you do this, you receive some more money. Now what happens if the share price goes down either a little or a lot? So there's two different scenarios that can happen here. If the share price goes down a little, this is what can happen. Say the stock price goes down $1, so it's now gone down to $23.49. Okay? Keep in mind you have received up front $3,100. Okay? So really you are still in front by $2,100. You have a paper loss of $1,000. You can only lose that money if you sell your shares at $23.49. But really at the end of the day you're not losing it because you're still in front by $2,100. Alright? And all you do is simply re-rent the shares for the next month. Now what happens if the stock price goes down a lot? What would be happening if the stock price falls to $10? I'd say you'd be a bit worried right about now, because you're sitting on a paper loss of $14,490. We want to avoid this at all costs, which is why we buy insurance. Everybody say it with me. We buy insurance. There is no excuse not to buy insurance, especially in this market. You're just, being careless if you do this strategy without buying insurance. And this is the only way I would ever do this strategy. Okay, so I'll show you how it works. Same scenario, we've bought the shares at $24.49, we've rented them out, we've received our premium. Now what we do is use a little bit of this premium here to insure our shares at $21. And that's going to cost us $1.56. But in saying this, even the remainder, it's still a 6.24% return. I'll show you how it works. You've got your $3.10 premium minus $1.56 for the put option, and that gives you a net of $1.54. You times that by 1,000, and that gives you a net premium of $1,540 income, cash, for the month. And you've insured 85% of your capital, which gives you 100% sleep at night factor, which I think is fan-bloody-tastic. And that's not all. Your returns are actually increased by buying insurance. And let me just show you how. You've got your standard share renting and your protected share renting here. Now, share price is the same. In this instance, you haven't bought insurance. Your risk is $24,490. Your income is $3,100. And your return on your risk is 12.65%. However, with protected share renting, the share price is still the same. You have insured your shares at $21, which means your risk is only $3,490. Now how do I get this figure? I simply minus $21 by 24. The difference between $21 and $24.49 is $3.49 times by 1,000, 3,490. That's how you get that figure. Your income, yes, is less, but look at this return. How fantastic is this return? You want to know how we get this return on risk formula? What it is you divide your total risk by your income. So you go 1540 divided by 3,490, and that'll give you 44%. And you times it by 100, you get 44%. So that's how you work that out. Now, how fantastic is that? Who would like to make 44% per month? I'm sure a lot of you would. I know I'm having a very good time doing this strategy. Okay, so let's recap on the 3 simple steps to doing this collar strategy, or Market Mum's capital protected income strategy, as I like to call it. First of all, buy some shares, then I write covered calls or rent these shares out, and at the same time I buy a put option or insurance. And remember, these steps are all done at the same time as one trade. It is a must. Do not forget that. Now, I'm sure people are asking me out there, okay, what stocks do I trade? What stocks do I do this on? And I have a simple criteria with rules that I follow. First of all, this is just basic technical analysis, mainly what I do. I locate the support and resistance. Is the stock finding support? And if it is, then I'll mostly do the trade. However, if it's finding resistance, I'll know that stock is due to have a bit of a fall, and I'll just wait for that to happen. So, easiest thing is you find your support and your resistance lines. And what's the overall market doing? You know, in this day and age, that the market can go into free fall quite quickly, and if that's happening, generally, even though I do my analysis on the individual stocks, largely, if the overall market is falling quite heavily, that will drag down those stocks too. So you might just want to do some technical analysis on the overall market as well. Is the market finding some support? Is the overall market finding support? If it is, it'll be a good time. And use your indicators to stack the odds in your favour. Now, there are several indicators I use, and I divulge all my secrets and how I pick my trades and everything in my first ebook that I wrote, Mum's the Word, Market Mum's Journey to Stock Market Riches. If you haven't got yourself a copy, get one, and it'll show you my first strategy that I was doing, but which I don't do anymore. However, the analysis that I used to do those trades are still current and still valid. So, you know, get yourself a copy and see how I do what I do.